Welcome to another S&P 500 analysis. Today is August 14, 2021. The S&P 500 continued to make weekly new all-time high and new closing high. Since the March bottom of 2009, the S&P 500 has gained over 500%. The last time we saw a huge correction from the S&P 500 was back in the period between 2007 and 2009. And that was 15 years ago. And for many today's market participants, they have not experienced a major market correction other than the 1 month 35% correction between February and March of 2020. And the S&P 500 has been up for 7 consecutive months now. So one begs to ask the question, is a correction imminent? In this video, we will look at the possibility of a major correction and where it might end up, along with our usual review of the S&P 500 price action, market sentiment, and market internals. Stay tuned. Now, before we talk about the potential or possible correction and take a look at the possibility of where that correction might lead the S&P 500, let's go and take a look at the price action and what has transpired from last week. And looking at this weekly chart here, we notice that the range for last week was again not a huge range. It's only 43.63 points. And the market did make a gain of 31.48 points or 0.71%. And as you can see, it is still inside of this converging, right, this narrowing wedge here that I have drawn. And also the price is still doing essentially doing one-time framing up. And it is above the 10-week and the 40-week moving average. So on a weekly basis, the trend continues to be up. And on this sentiment chart, as you can see, the daily price of the S&P 500, on Friday, the S&P 500 gained 7 points or 0.16%, and it is a new all-time high and closed with a new all-time closing high on Friday. The VIX closed at 15.45, so obviously the market participants are still in very complacent mode. And also the put-call ratio is still under this 0.75. It is sitting at 0.58, so risk is still on, and the market participants have no fear of putting on risk. And when we look deeper inside of the market's internal, we see that there are some divergences. Right? Looking at the up-down volume ratio here, you notice on Thursday and Friday is running negative, and that means the down volume is more than the up volume. So you can see on Thursday and Friday, the S&P 500 made a new all-time high. Right? And also in addition to that, we also noticed that the advanced decline, the decliner outnumbered the advancing issues. So again, we're seeing a negative divergence between the advance and decline, and it shows that there is a lack of strength in pushing this market or pushing the S&P 500 to an all-time high. And on this new high, new low chart here for the New York Stock Exchange, we see that on Friday, there were 113 more new 52-week high than 52-week low. And if we take a look at these bottom chart here, you can see on Friday, there were 171 new 52-week high versus 58 new 52-week low. So although we are still seeing more new high than new low, but the other market internals, such as the advanced decline and also the up-down volume ratio, is showing weakness in this market. The other thing to bear in mind is that when we see a market making new high, we expect to have a higher number of stock making new 52-week high. Now, there are over 3,000 stocks traded in the New York Stock Exchange every trading session. So when you're only seeing 171 stock making new 52-week high with the S&P 500 making a new all-time high, that is not very impressive. And that shows you there are not that many stocks all participating in making new 52-week high to help push the S&P 500 into all-time high territory. And looking at this cumulative advanced decline line for the New York Stock Exchange, we see that there is still this negative divergence between the AD line and the S&P 500. So that just kind of highlight the weakness, the internal weakness of the market as the S&P 500 is pushing to a new high. And now taking a look at the NASDAQ market, we see the NASDAQ 100 also closed with a gain on Friday, but it did not, throughout the week, it did not make a new all-time high or close with a new closing high. We saw that the market, the NASDAQ 100, closed up a little bit under 48 points on Friday at 0.32%. But once again, look at the up-down volume ratio. It is actually minus 1.7. So there were 1.7 times more down volume than up volume on a day that the NASDAQ 100 closed up almost 50 points. And also looking at the advanced decline, the daily advanced decline on Friday, the decliner outnumbered the advancer by 1,299. Even on Thursday, with another up day, a positive day for the NASDAQ 100, the advanced decline was 674 more declining issue than advancing issue. So once again, we are seeing internal weakness inside of the NASDAQ market as it try to push to a new high territory. And in the new 52-week high, 52-week low territory in the NASDAQ market, it actually is negative. In other words, there were more new 52-week low than 52-week high. You notice on Thursday, it was actually minus 31. So there were 31 more 52-week low than 52-week high. And on Friday, there was 17 more new 52-week low than 52-week high. And looking at the individual, see that on Friday, there were 145 new 52-week high in the NASDAQ market versus 162 new 52-week low. And although that, it doesn't seem that much negative, the difference, but as you can see, the new high is not gaining ground as the NASDAQ 100 is sitting near that all-time high territory. Okay, and also you can see that there's a little bit of an increase in terms of the 52-week lows. And here is the big sign of concern in the NASDAQ market is the advanced decline line. Look at the cumulative advanced decline line. You see how much it's dropping while it is actually, the NASDAQ 100 is actually trying to gain back some of the recent loss. Right? It's making its way up to near the all-time closing high, and you see that the advanced decline line is actually breaking prior low and breaking two prior low. So it might even get down to this low here back on, was put in on July 19. So there you see that there are tremendous amount of weaknesses inside of the NASDAQ and also the New York Stock Exchange. And the indexes are being pushed up by some of these, not some, a few of these heavy weighted tech stocks such as Apple, Tesla. Keep in mind that the index are weighted. They are not equally weighted, okay? So all it takes is to manipulate a few stocks inside of the index and it could move it up and down in regardless what the internal or the broad market is doing. So right now we are looking at a broad market is not participating in this new high push. Okay, only a few selective stocks that are pushing this market up or helping to maintain the market at this elevated level. Now, before we go and take a look at the correction possibility and where the S&P might end up if we see a major correction, let's take a look at the price action of the S&P 500 and the major market indexes. Then we go and take a look at that, the possibility of the correction. Okay, looking at this daily chart of the S&P 500, as you can see that we took out this 200% extension here, this 44.52 that we've been watching, and on Thursday it closed above it. Then from the previous video, we have projected this range extension up to another possible target when this target is breached. And the new target was 44.87, so you can see that it could be inching its way up to this level next week if the S&P continue to push into new high territory. And the other possibility is we could see this psychological 4,500 number to get hit on its way up to the top of this trend line here. Now, trend line is very subjective, right? So I won't pay too much attention to the trend line, other than the fact that, yeah, some people might be eyeing those. And, the market is a self-fulfilling type of mechanism. So when you have more people looking at certain things or anticipating certain things, then there is that likelihood that certain things will come to reality. Okay, so there's other people that, draw a trend line connecting these highs, and then they could make a case that, hey, it's already bumping up against resistance, and we could see a little bit of a pullback, and that is a possibility. So if we do see a pullback next week, then I'd be keeping an eye on coming back inside of this range here, which would be this 44.29 or 44.30 level. Right? If it come back into this range, this balance area, and unable to get back above it, then I will be looking for this thing to come down and possibly fill this little gap here. This gap is not completely filled. So come down and fill this gap. And once again, essentially testing these Fibonacci extension level, the 43.78 level and the 43.38 level. Okay, so those are some of the levels that I will be keeping an eye on. If it, break under this balance area, essentially looking at these levels and possibly come back down to this pivot high here and somewhere around 42.57 and 42.32. So, but first thing first is to see what to be able to come back into this balance area next week and see how the price will react once it get back into this balance area. Then the upside, once again, is look for the possibility of the 44.87 or the psychological number 4,500. And looking at the NASDAQ 100 daily chart here, you see this is the all-time closing high. And last week, the NASDAQ 100 did not come up and take out this high. It did try to come up, on Thursday and Friday. So we'll keep an eye on it to see would it be able to come up and take out this high, get back above this, maybe possibly 15,200 level, potentially come up to this 1618 at 15,233. But if it decides to continue to reverse back down, then once again, I'd be looking for the prices to come down to these level on its way back down to this trend line possibly. And that would bring it down to this 14,600, this 127 extension somewhere. And for the Russell 2000, we said we are keeping an eye on this level here, the 2297. Although it did stay above this 2195 area, right now it seems to be hovering against this trend line here for support. So next week we'll keep an eye on to see would it continue to hold support on this trend line and make its way up to this 2297, or would it reverse back to the bottom of this balance area? So we'll see here. Remember, there's this break up, look above and fail came down to the bottom, and then come back up on its way back to the top of this balance area, and it got a little bit of a detour, right, before it makes it up there. So maybe we could be looking at a similar type of a price action and possibly maybe come back down to these lows here and push this back up. So we'll see, right? Anything is possible. But again, look for the 2297 or this 2195. Break that 2195, then look at this the bottom of this balance area, these lows here. And for the Dow Jones Transportation, it held above this support here at 14,242. And we're saying that we are keeping an eye to see whether we claim the 15,000 level. Got pretty close. It closed on Friday at 14,927.58. So we'll see whether be able to get above this 15,000 next week. And once again, we're essentially looking for it to see that it come up to this support turn resistance level here around close to this 15,300 or so. So we have to get back above this in order to make a run again at the all-time high. And for the Dow Jones Industrial, we see the Dow Jones Industrial also push up to a new all-time high and also close with a new all-time closing high. So once again, we're essentially looking at this range extension. We're talking about this balance area, that it broke this balance area, and then we did a 100% range extension and project a potential target somewhere around 36,438. Now, will it get there? Well, who knows, right? But at least we got something there to kind of keep an eye on to see will it get there or not. Because if I project this trend line up here, essentially this is a channel, and there's a possibility it get close to it if it's not get up to it. So that's certainly within the realm of this channel that get up to this 100% range extension. Now, the interesting thing is, although the New York Stock Exchange Composite did not close with a new closing high, but it did make a new all-time intraday high. So the New York Stock Exchange is a broad market index, right? The New York Stock Exchange Composite. This index shows that it has a little bit more broader market participation than the other index, such as the NASDAQ 100 or the SP500. What this is telling us is that there are stocks collectively try to push this market to a new high, but still unable to do so. So whether this is the top or it is just sort of gathering up momentum to push it to a top. Now, we know that there are a few these high, large cap tech stock could push the index up or down relatively easily. But we could also have a collective number of stock that might not be heavily weighted on the index, but when you collectively combine them, then they have this total weight that is enough to push the index to a higher level. So we could see another rotation away from the tech and back to the value, because we saw that recently, right, with the financial, the energy, the material, and the industrial made a push while the tech stock was retreating. Then we flip-flop. Remember, we were saying like playing ping pong, handing the ball back and forth to the tech or the growth and the value. So we could be seeing this, back and forth between the growth and the value, handing off to each other a little bit longer before we see a potential correction. So now let's go and take a look at that correction that we've been talking about. What is the possibility and where the S&P could end up if we do see that correction. Now, before we actually go and take a look at the correction, I forgot that I did not cover the 10-year bonds and the dollars and the gold. So let's quickly go to these before we go and talk about the potential or the possibility of a correction. As you can see on the 10-year yield, it came down again after it went up for a few few days, it came back down to 1.29 or 1.3. It got as high as close to 1.38. Okay, so definitely the yield is trying to edge its way up. I think the sentiment is that we're going to see the Fed start tapering sooner than what they said a couple FOMC meeting ago. Remember when they were saying that probably start raising rate in 2023? And I said, don't believe that they're going to end up raising rate much earlier than that and possibly in 2022. And right now, there is a possibility we might see a rate increase by the end of this year, 2021. So keep watching. And here, looking at the US dollar, is still inside of this zone here. It got up to somewhere around above the 93 and then start coming down a bit. So right now on Friday, it closed at 92.5 or so. So we'll continue to see is the US dollar continue to bounce inside of this zone and maybe inch its way up to the 94 level before it start coming back down. Now, if we break this 92.11, I do anticipate it come back down to this 91.24 and possibly retest this low down here under 80, in the 89.74 area. And here we are seeing the crude oil price is still holding firm between the 70 and 68 level. So on Friday, it closed at 68.44. So watch the dollar. Right now, it's not a supply or demand, although, yeah, there are talk about this, Delta variant with the economy, might be going to some sort of a lockdown, a possibility of a lockdown again, and that sort of thing, or putting a damper on the reopening. And so that will kind of hold down the demand side for crude oil. But watch the dollar, because the oil is pegged to the dollar. And right now, with the supply and demand question sort of, iffy, and I would say not really valid, I would put more credence toward the US dollar and the crude oil price. And looking at the precious metal market, looking at silver, remember, silver came down and dipped below the 22.72 level a few days ago and then got a nice bounce off of that. And was saying in the previous video, I'm still looking for the possibility to come back down to retest this level before I will even entertain that looking at potential long setup or swing long setup, because I view that there could be another test at this 22.72 level before we actually try to break out of this this decline here. And similarly for the gold market, right? Gold also dipped down to 1700 level. I've been talking about that, waiting to see it come down. Then I'll be looking for swing long setup. But you see this bounce, this reaction here is way too abrupt. And so right now I'm still looking at the possibility to come back down to retest this level somewhere around this 1700. And similar to silver, then I will entertain the possibility of looking for some sort of a double bottom, similar to this here, for some sort of swing long setup and possibly swinging it back up above this 1850. And if it breaks this trend line, then we could be looking at the next swing up to the 1923. If you have not subscribed or if you are new to this channel, click on that subscribe button and subscribe, and also click on that notification icon so you won't miss any future video from me. Really appreciate you click on that subscribe, because it will help me grow this channel. Now for the long-awaited discussion on that correction, let's go and take a look at the possibility of a correction on the S&P 500 and where it might end up. Now let's go back in time a bit. Right here on the screen, I have a monthly chart going back all the way back to 1928. But we won't be looking at the price back that old. what we're going to do is we're going to go back to somewhere in 1987. And we want to take a look at here back in 1987. And this is August 1987 to October 1987. This is a correction of 36% or so. So from this 36% correction, we're going to take a look at it from the low of this correction all the way up to 2000. This is March 2000, basically the peak of the dot-com era. And the market has gained, the S&P 500 has gained 617% since the October 1987 low to the March 2000. And that is comparable to the 2009 low to the present that we are seeing. If we go forward and we take a look at this 2009, back in March 2009 to the present, we essentially have gained 570%. Now, also in addition, we gained 100%, over 100% since the pandemic low, since the correction, this 35% correction between February and March. Now let's go back again, back to the dot-com era. We see that from March 2000 to October 2002, the S&P 500 lost 50%. And from this low here and to the October high in 2007, once again, the S&P 500 gained back 100%. So this is similar to the March, the pandemic low that we saw, right? The low in March of 2020 to the present, which we have gained over 100%. Now, looking at this October 2007 to March 2009, right, we saw it drop 57%. And that essentially wiped out the entire gain that we have realized from the dot-com bubble burst bottom made in October 2002 to this high here in October 2007. So that brings us back to the present right now, right? This March 2009 low to the present. And we're essentially looking at a 570% gain, slightly under that, remember that 1987 low to the 2000, March 2000 high was 600 some odd percent. Right now, we are running slightly under that. So maybe there is a little bit more to go before we see this market start, maybe coming down and pull back to a possibility of a 50% correction. So let's say that it went up to 600 some odd percent, and let's say it went up to 4,800. Okay, so if we come up to this 4,800 or so, and if it pulls back 50%, let me scroll this over, and let's say it come up 4,800 and come down 50%, and that will essentially bring us back to close to the March bottom of the pandemic low, and that will bring us down to under 2,500. So anywhere between 25 and 2,200. So depending how much higher will the S&P 500 go before it start to make a correction. And if it does make a correction of 50% or so, then that's what we should anticipate. The S&P 500 could come down and take out the March low, the March 2020 low. Not saying that it's going to happen, and not saying that it won't happen. All I'm saying is that we should be open to all possibility. This is one of the possibilities that is very probable. It's just that we have to be prepared. I know many of you are feeling this market could only go up with the Fed printing money and everything, right? And the stimulus, the infrastructure bill. We have tons and tons of trillions of dollars pouring into the economy. But bear in mind, answer this question when people is making this statement. It can't get any better than this. So where you think the next direction will be when, if anything, that cannot get better than this. So I leave you with that. Hopefully you enjoy this video and find it informative and mostly entertaining. So be sure to click on that thumbs up to help me promote and share this video. Thank you for watching and stay safe.